The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
I think now we are at probably the decisive stage, and the next few weeks will tell us if this was just a cool down of a positive trend or an actual shift that's leading us to a bear market phase.
Hello, you're watching Proactive. I'm joined by Matteo Greco. He's Senior Associate at Fineqia International. Matteo, very good to speak with you. You're off with your February report, and you saw a 21% drop in crypto ETPs, assets under management. That's the steepest since mid-2022. What changed so dramatically in just 1 month?
Hi, Stephen. Thanks for having me as usual. February was a little bit of a catch-up month for the ETP point of view, because there was a strong sell-off happening in the last weekend of January, which happened, of course, when the ETPs market were closed, while the crypto ETP obviously was still trading. And as a result of this, the decline from an AUM perspective was fully absorbed in February. So that was a strong factor on this drop. But yeah, obviously, even accounting for that catch up, we see that the AUM year to date is decreasing by more than 25%. So surely the 2026 start has been characterized by a strongly negative price action, which resembles some potential bear market conditions. So we'll see what comes up in the next months to assess if we're just seeing a strong pause from a bullish trend, or if the last few months were actually the start of a reversal trend.
I mean, the market cap fell about 13% in February alone, but ETP AUM dropped over 21%. I mean, does that suggest investors are pulling out, or was this mainly price driven?
Definitely mainly price driven. As I just mentioned, there's obviously a mismatch between the ETPs that are trading Monday, Friday versus the underlying that they wrap, which the crypto asset are trading 24/7. So in terms of the short term, that component was strong, because if we look at the actual outflows in February, they were extremely limited. They were lower than January, and actually the last week of February, we saw some strong inflows with overall more than 1 billion in net inflows, mostly obviously in BTC ETPs. But the overall figure for February just tell us that despite a negative price action, the actual outflows were extremely limited.
I mean, Bitcoin ETPs fell below $100 billion for the first time since mid-2024. And do you think that's psychologically important for institutional investors?
I think it surely brings some psychological significance, because as we know, for investors, rounded numbers always have an importance. And also, AUM is now going back to a level that we didn't see since shortly after the Bitcoin spot ETF's approval. So there's definitely a component of some psychological component that might scare investors. But I would say that also we might take into account that, as I said, there's been some strong inflows in the past few days, despite the strong negative price action. And even in the last 2-3 days, we've seen surprisingly prices jumping up again. So I think that if we look at the broader picture, we still can confirm that ETPs investors tend to have a much lower price sensitivity, because on a year-to-date perspective, we see that the overall AUM decreased 25%, but the overall market cap decreased 22%. So we definitely see that the biggest component of this AUM drop is pure price driven.
I mean, Ethereum ETP saw the sharpest decline, down nearly 28%. Why has Ethereum underperformed Bitcoin in this cycle?
Ethereum has been not performing great in terms of the asset itself, But from an ETP perspective, we definitely have to remember that 2025 was an extremely strong year for Ethereum. And surely the recent market drawdown that was stronger for altcoins hit ETPs and the AUM quite strongly, and there's been a consistent drop. But it's also true that if we look at the inflows since the Ethereum spot ETF approval, so July 24, it sits at about 12 billion, while the Bitcoin ETPs since 2024 start, when the spot ETFs were approved in the US, sits at about 55 billion. So if we draw that comparison and we proportionate with the market cap, we still see that the Ethereum ETPs in the past 18 months had a higher demand, higher inflows in comparison to the market cap versus Bitcoin. So it is true that the asset itself has not performed great, but from an institutional point of view, there's definitely high demand for Ethereum.
You mentioned that this could signal a shift in market structure for the ETPs. Are we looking at a temporary reset or a real cooling in institutional demand?
I think now we are at probably the decisive stage, and the next few weeks will tell us if this was just a cool down of a positive trend or an actual shift that's leading us to a bear market phase. Now it is probably still too early to understand if that's the case, but as mentioned, I think the real positive from an ETP's perspective is that we've had the confirmation in the past few weeks that price is driving almost all the drawdown in AUM. Prices in the last few days have moved up, as well as ETPs witness some strong inflows. So from an ETP's perspective, the demand is still there, still strong, despite all the negative price action. Obviously, there's a question mark of if this negative price action keeps going for a few more months throughout 2026, does the demand remains as strong? We still don't have the answer, because obviously it would be the first time since the ETF's approval that a bear market hits. So I think we have to be cautious for sure, but so far on the ETP side, I think the demand still shows particular strength from the data.
Let's see how things are looking then at the end of March. Matteo, thank you as always for your insights.
Thank you for having me. Always a pleasure.
Matteo Greco, Senior Associate at Fineqia International.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.